Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time to share with you a quick review of the company. In this case, we are going to analyze Adobe. Just before the earning presentation, and we are going to review the past earning results, the present expectations, and also the future project, risk, threats, and of course at the end, technical analysis to find out the price action we could expect on this company, on these charts. Let me set the presentation as usually with you. And if you are not subscribed, let me remind you to subscribe our channel, to click on the bell to receive notifications anytime we update new content on this channel. Now, feel comfortable and join me for the coming slides. First of all, the evolution, performance, and future outlook of Adobe. I just want to make in this presentation a kind of few ABC on the company. So it was founded in 1982. The headquarters are in San Jose, California. Key products: Creative Cloud, Document Cloud, Experience Cloud, basically digital services. Market position is one of the leaders in digital media and digital marketing solutions. And recent initiatives, heavy investment in artificial intelligence. One of the parts of this presentation include also the evolution of the debt and the equity of the company. And you will see that since AI is a key factor for technological sector, Adobe has been investing a lot of money on this strategic department. It's also included with another technological companies investing millions in this sector as one of the key factors and also one of the key risks in case the things are not going as expected. Historical performance analysis on Q3 2024, we got a revenue of 5.41 billions with a 11% annual growth rate year to year. We also go EPS based on non-standard country results, $4.65, beat estimation by 0.11 cents. Well, 11 cents basically. The EPS by standards, it was $3.76. Strong performance across Creative Cloud, Document Cloud, and Experience Cloud. Financial metrics, cash flows, $2.02 million from operations. Annualized recurring revenue, ARR, net increase of 504 million. So really good results. But I will say the key factor here is the stability of these incomes for many years as one of the reference in the sector. Project results and forecast between 5.5 to 5.55 billions on Q4. We also get expectation of EPS by $3.58, $3.63 per share. In terms of the consensus, the forecast is 3.77, so it's even above that range of expectations by an accountancy. The estimation of analysis is even higher, $3.77 per share. And the target price based again on the analysis, on accountancy criteria, fundamental analysis, however you want to call it, is $610 per share. Lately, we will see at the end of this report, the technical analysis, the charts are indicating that between 650 and 600 is the key problems of this company because it has been facing certain very important resistance in the last 2 years on those levels. You will see in detail later. Market position and competitive analysis. Strength. We got has a strength, a strong enterprise relationship and a scale. It's everywhere. Everyone is using Adobe in every single company. In the corporative environment is a kind of key tool on your computer. Best in class margin profile because it has been in the industry for many, many years. A creative AI contributions because it has been investing on this, and that's why the competitors are changing. Yes, the competitors for Adobe are changing. We know also have Canva, DAL-E, which is all of this is AI applied to graphic designs, is competing with Adobe. Autodesk, Salesforce, Oracle, Workday. So I will say it's a kind of multi-tool related, not only with design, digital design, but also Ofimatics. Market impact and Gen AI or Generation AI. Increased productivity and lower technical barriers, limited impact on B2B software sales due to enterprise relationships. Because they don't need to develop strongly B2B for considering the position they have in the market. Now, this is also important. Risk factors and future initiatives. Risk factors, risk and threats for the future in this company are competitive pressures, growing competition from AI driving tools and other software providers, if you like the world of the software and the AI tools, you know that they are growing like mushrooms everywhere. We can find AI tools of every single aspect. Every day is a new tool there. That's why the risk that a new tool appears and take down the all leaders on this industry is always high. But not only in this regard, it's also any other aspects of technological sector could be beat by another new company with a new technology using, especially with AI, which is make the technology grow exponentially. Market saturation, potential saturation in some segments, economic uncertainties, general economic conditions impacting customer spending, AI implementation, successful implementation and adoption of AI technologies. Now, future initiatives, AI integration, continued investment in generative AI tools like Firefly, subscription growth, focus on subscription-based models for sustained revenue, operational efficiency, balancing growth and profitability with a strong cash flow. You will see in a minute the relation between equity, debt, liabilities, assets, everything in balance will show you that they are actually betting strong for the future. They are spending money to improve themselves, and this is it's a good thing, but it's also a risk. Okay. Innovation in digital experience, commitment to personalized digital experience, merge and acquisitions, strategic acquisitions to strengthen offerings and reach new customer segment. Before we go to the numbers, the financial numbers, let me read you the disclaimer one more time, if I didn't, which is basically to remind you that this is not advice of any kind. It's just information I'm sharing with you, and depends on you the decision you're taking to invest at the end in this company or not. If you have no experience, my advice, you just consult with a professional financial advisor before you invest in any kind of financial asset. Now, this is the picture, the last picture showing us how the financial aspects of this company are working. As you can see, we can see in long term, the assets are overpassing by at least 2/3 the liabilities, which is super good. In short term, the equity is completely different. In short term, we can see the assets and liabilities are too close, which means they are, as you can see here, let me see if I can grab, no, I can't. As you can see here, follow the mouse, there is a interesting increase on debt book value exactly between 2023 and 2024, which means the fever of artificial intelligence. They have been spending money on artificial intelligence. That's why the ratio debt equity is dropping, because they are risky the money, part of the money, on improve themselves and upgrade themselves in the new AI world. That's why this is good, because it could generate future incomes, but it's also risky because it's exposed the revenues of the company, the money of the company, and the cash flow of the company for high impact of external factors, like, for example, the external risk, like, for example, interest rates and so on. Finally, going to the charts, let me disappear from the screen so you can see everything clean and clear. This is a long-term chart, so you can see since 2018 the evolution of the company, which is great, by the exception of the drop in 2022. But as you can see, $600 and $650, even I will say around $700, and be really clear resistance. And we can see the shape that this arrow that is forming the chart is indicating that at some point the price is getting low and lower volatility. And anytime we see any asset decreasing the volatility, is always a kind of countdown before they basically experience a strong breakout and a strong movement of the price. That means, in other words, that Adobe sooner or later going to face a strong movements, either downside or upside movements. If we go to short term, things seems to be more clear, because you can see here how there is a double resistance in the area of $600. We got also a double resistance in the area of $650. And if we follow the trend, probably between $575 to $600, the share could experience resistance and new shells. That's why I believe we should be cautious in this company, and only when we see it's breaking out this trend and this figure, this kind of arrow is breaking up obviously by the top size, is when we can consider new entries on this asset. Apart of that, I will just step away and see, because it's an interesting company, see closely, but not entering the company at the moment, and pay attention for those levels that could increase. For those ones who also practice short shelling, it could be very interesting short positions around these levels. And again, this is not advice of any kind. I'm just suggesting what is the most common strategies considering this chart pattern that everyone can analyze. If you are not experienced investor and you are considering to invest, please consult with a financial advisor first. Now, this is it. And let me remind you, if you like this content, please give me a thumb up. Leave me a comment on the bottom of the video to note that you are interested in this. Even suggest any other asset, any other company you want to analyze. Let me know and I can prepare a video for that. And subscribe to our channel, click on the bell, and please follow us for the next coming reports. That's all. Take care. Bye-bye.